If you want to really save a lot of money in when it comes to interest or even closing fees, I want to share with you a few business borrowing skills that really can help you big time, especially if you implement them consistently. So over and over and over. Okay. The first thing you need to do here is that when it comes to borrowing for your business, is to really have a clear idea about your business goals and needs. Okay. I mean, you can borrow $1 million, for instance, but if you have no idea what the $1 million will be used for, and I'm speaking about having a specific idea. Okay. Sometimes you can borrow and then start figuring out how to use the money, but your business needs and goals are going to help you choose whether or not you should actually apply for a business loan now, or you should just wait. Okay. So, and sometimes just waiting can really help you big time. So if you wait a couple of months, you might actually benefit from let's say a promo, for instance, from the lender, and they can actually help you out, or maybe your geography. You are maybe in a state that the lender wants to expand into. Okay, so that's important. So bottom line is you want to assess why you need a loan in the first place, and for what purpose and goal. And let me give you an example. Suppose you are looking to you're trying to purchase equipment, or expand operations, or buy inventory, or manage cash flow, or even open a physical location, or maybe hire 15 more people, 20 more people, right? So these are a few of the many reasons why a business might decide to take on debt. And remember that debt, when taken strategically, can help your business grow, but most importantly, can also help your business establish business credit, so that whatever payments are flowing through the debt repayment process can actually flow through your company's business credit profile, whether it is on Dun and Bradstreet for your paydesk score, or on Experian Business, or also Equifax Business. That way, you can really access more capital, let alone to actually scale your business big time. Another business borrowing skill that saves millions in interest and fees has to do with your credit score. And when I talk about credit score here, I'm speaking about your personal credit score, but also your business credit score. Let me first talk about the personal credit score. There is a correlation between your personal credit score and your ability to borrow for your business, especially if you apply as a sole proprietorship or you have a small business. If you have a small business, lenders are going to pay attention more to your personal credit score than to your business credit score. So basically, what happens here is that it will be harder for you to borrow using your EIN, your company's EIN, employer identification number. So that's important. So knowing your personal credit score can help you maybe wait a couple of months, maybe apply now, or just wait a couple of months. Let's say you have 600 right now, and you know if you borrow at that FICO score, you will be paying interest of 15% or 20%. But if you were to move from 600 to 650, your APR will go down to maybe 12%. If that's the case, I mean, this is a hypothetical situation, but this could happen. So if that's the case, what happens here is that just waiting a couple of months and working on your FICO score in the meantime can really help you big time save money. Okay, so that's for your personal credit score. What about your business credit score? If your business does have a business that does have a credit profile on Dun and Bradstreet, Equifax, or Experian, you're gonna have a business credit score. Now, now the most prominent is Dun and Bradstreet. So if you know, for instance, your business paydesk score, that's the way it's called. If you know that, you can decide whether or not you should go after more funding, application, more debt, if you will, or just slow down your business borrowing strategy. Okay, so your paydesk score can really help you. Let's say, for instance, you have a paydesk score of 85. Paydesk, by the way, goes from 0 to 100. So anything above 80 is considered pretty good. So if you have a 85, for instance, and you know you can qualify for better funding at 90. Or again, the same strategy applies timing. Okay, so just be a little patient, so you can fix your business credit or your personal credit. Can help you save money, save on interest, save on closing fees, save on origination fees too. Because maybe you'll take the time to look for for a suitable lender for you. When it comes to a business borrowing skills that save millions in interest and fees, you also have to think about the type of loan. See, the good thing about business loans is that you have business loans comes in different types and shapes, different amounts, different configurations, different, let's say, fund release patterns. Okay, so you have to have a clear idea about what you need specifically when it comes to business loans. Now, if you understand your business needs and goals, then exploring and determining the type of loan that you need becomes even easier. Okay. Now, in this economy, things change all the time. Okay. Simply because you know your business needs and goals doesn't mean that you will be automatically you'll be matched with a certain with a certain business loan. Now you can do it yourself. You can do it like yourself, or you can go to a loan marketplace to kind of help you out. The cool thing about going to a loan marketplace is that they have an opportunity to study your credit profile, but also your business situation, and really see what you really need. Like you can say, you know what, I need a term loan, but they might say, well, after analysis, we think you need a business line of credit. Okay, you don't need a business term loan. You need a business line of credit. So that's the advantage of going to platforms such as Lendio, such as Clarify Capital, such as National Business Capital, such as Lending Club, and so on and so forth. So or even Smart Biz. Okay, you have the opportunity to speak to what I call loan connoisseurs. So when it comes to exploring and determining the type of loan, you can really think about term loans, for instance, lines of credit, SBA loans. So SBA stands for Small Business Administration. So that's actually the kind of loan that the government will actually back up. So the government will guarantee up to 80 or 85% of the loan itself. Okay. So that's an SBA loan. You also have equipment financing. And finally, you also have invoice financing. This is not an exhaustive list, though. You also have merchant cash advances, so MCAs. You also have revenue-based financing. So you have a lot of configurations when it comes to business loans business loans in general. Another skill that another business borrowing skill that saves millions in interest and fees has to do with evaluating your company's overall financial health. Okay. And why am I saying that? Well, if you can really determine if you can assess your business's financial health, you can determine whether or not you can really you need to have funding, or you can use your own funds, your company's funds. Okay, why is it important? Well, sometimes you have to really understand whether or not the economic value of a business loan is actually positive or negative. Big companies do this analysis all the time. Okay, should I use my own funds or should I just borrow? And the reason why you want to really go through this analysis is that if you have if you can use your own funds and get more like if you get a value added, if you get a return on investment that's way higher than the interest a lender is charging, it's just a lot better to use the funds for investments. If you know, for instance, that a lender is charging you, let's say, an APR of 10%, and you actually have money, you have internal funds, you have your company's own funds, and you can really deploy that capital and get and score a return on investment of let's say 25% or 30%. It just makes sense for you to actually use your own funds for investment purposes and borrow. That way, you are still better off because you have the ability to know to actually derive value from the investments. Now, this what I'm telling you, it's not really a straightforward approach. So maybe you might reach out to a CPA, a certified public accountant, or to a business specialist, somebody who understands the nitty gritty of investments, but also budgeting. Okay, so the person will look at your company's cash flow, financial statements, and profit margin to see that you have enough leeway. Actually, okay. Another way to save millions in interest and fees is to determine the loan amount needed. Do you need $100,000? Do you need $200,000? Do you need $300,000? Do you need less? Do you need more? Basically, the loan amount basically will play an important role in terms of the APR. I mean, the APR you are paying, the interest you're paying, but also the closing fees or just origination fees in general. So the loan amount needed also has an important fact plays an important factor when it comes to the repayment window. Obviously, if you borrow a lot of cash, you might need more time to repay it. Okay, so if you borrow, let's say, 50,000 versus $5 million, at 50,000, maybe you'll get 5 years. But at 5 million, you might need to have 10 years, for instance. That's just an example, though. So if you want to have a business borrowing skill that saves millions in interest and fees, I want you to really think this year about comparing and shopping for loans. I mean, I don't care how well you know your current lender, your bank or credit union. It's always good to shop for loans. Okay, the reason why you're shopping for loans is that you are shopping for loan amounts, you're shopping for loan conditions, you're shopping for speed of fundability. In other words, how fast the funds are released. Okay, the loan funds once you're approved, and you also want to pay attention to making sure that you're getting the best deal. Okay, so the good thing is comparing shopping for loans. You can do it manually, you can do it one by one. So go for one loan and then another and then another. Or you can go to a loan marketplace. Okay. I think I've told you before about the loan marketplaces. So that's important. If you are doing manually, if you're doing it yourself, make sure you take notes. So when you go to one spot, when you go to one lender, take notes about their conditions, the terms and conditions, and do the same thing for the next one. Okay. And also, when it comes to shopping for loans, please, you want to go for loans that pre-qualify you. Don't go for loans that really do a hard pull right away. No, you want to go through loans that have a soft pull. So pre-qualification means that you are getting a soft pull right away, and your credit score is not going to lose weight simply because you're applying for multiple loans. Okay. Another skill that actually saves you millions in interest and fees is to actually talk to someone. Okay, and I don't care how confident you think about you. I mean, how confident you are about the loan that you are about to get, but it's always better to speak to someone so you can have better perspective. Sometimes after talking to someone, you might have a different view about the whole lending process. Okay, so prepare a set of essential questions to ask your prospective lender of choice. These questions should aim to improve your understanding of the loan's terms and conditions, interest rates, fees, penalties, and other requirements and obligations. That way, you are really walking into the whole conversation more prepared. Another skill that saves millions in interest and fees is to actually pay attention to the loan application paperwork. Normally, depending upon the loan that you're getting, the paperwork might be complex or very easy. In other words, very streamlined. Okay, every lender has its own terms and conditions when it comes to a loan application process, a loan application paperwork. So it's up to you to really speak to a representative first to see what exactly they're asking you to have. Okay, and sometimes there are things called no doc or low doc loans. Okay, and those do not really ask. They don't ask you for a lot of paperwork. It really depends. It really depends on the industry you're in. So some industries, just because of regulations, because of government regulations, will ask for more paperwork than others. For instance, if you are in hospitality versus healthcare, for instance, the requirements are not the same. So every lender, once again, will have specific document requirements. Okay, but generally, the following are required. I mean, let me put this on the screen so you have a clear idea about the kind of document or requirements I'm looking at. So you have a proof of business ownership, you have a EIN, business licenses, and articles of incorporation, clear and detailed business plan. Okay, I mean, a business plan will help the lender know whether or not you are like you're using the funds for the right purpose, the right quote unquote, of course. And so you also have, let's see, the tax returns, so business and or personal. So some lenders will ask you to provide to actually add your 1120s, your 1065, or your 1040. It really depends. You have bank statements, business and or personal, balance sheets, income statements, and cash flow statements, and also collateral documentation. So that's that's an important from a scalability point of view. Another business borrowing skill that saves millions in interest and fees has to do with the borrowing decision reaffirmation. Let me explain that. Reaffirmation means that you're really double checking your needs, your funding needs, and you're asking yourself, do I really need the funds? And if yes, is this the right time for me to really get the funds? Okay. So after assessing your need for additional capital, identifying the specific type of loan that matches your business goal, developing a repayment strategy, and having, let's say, contingencies in place in case of unexpected hardships. Just make sure those. If you go through all those things, it means that you are prepared. Okay, you can feel comfortable with the idea of taking on debts. The loan should ideally position your business in a much better state for increased revenue than the status quo, right? It's one of those things where you want to seek, you want to really see, you want to reaffirm the borrowing decision, and finally, you want to seek advice. So, seeking advice is a pretty good skill to have because sometimes actually doing things yourself, like doing things on your own, can be good. But when it comes to monetary things, when it comes to money issues, sometimes it's better just to have someone actually work with you. Okay, this can be a financial professional like a CPA or a business counselor. Okay, and or you can just go to like there are some nonprofit organizations that provide business advice to business owners. But the bottom line is, it's always better to have an expert's eye on the specific process that you are developing. Okay, that way you know whether or not you are making the right move or not. So, in conclusion to this conversation, I shared with you business borrowing skills that save millions in interest and fees. And I went through the skills and finally the conclusion. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.